Hello, everybody. Welcome to Talk About Houses. I'm Todd.
I'm Juana.
Okay, so what we're going to do is we're going to talk about home price appreciation estimate from 27 different sources. We're going to power through them all, and then we're going to talk about them really quick, and then we're going to tell you sort of our opinion about what we think we would do based on a specific scenario that we will share with you at the end. So you have to get to the end to hear the specific scenario because we know there are people waiting to decide about what to do about real estate.
Okay, so if you are new to the channel, please subscribe, hit the notification bell, like the video, share the video, leave us a note, tell us where you're watching from. Let's go.
Okay, so the headline to the article was something big is happening in the U.S. housing market. Here's where 27 leading research firms think it'll take home prices in 2023. So what we're going to do is we're going to jump into this first chart. The first chart is the home prices nationally, all the way from 2000 to today. Now, the peak of it is, you can see right there, it's already come down from the peak. Mm-hmm. And you have two red lines. The red lines represent 10 and 20% off from the peak. Now, why this is important is because as we read through these, you'll be able to remember this chart, hopefully, and then imagine where that puts us compared to, where we should be or where we were historically. Of course, home prices are up like, I think, 37%.
Right. So when you look at that chart, can we go back to the chart a minute?
Yeah.
When we look at that chart, you see where we are today, and you see that if we drop 20%, we would still be up from 2020.
Oh, a ton. It's substantially up.
And that was only 2 years ago. So if we drop 20% and we're still up from 2020, when you consider that over time, generally real estate appreciates at about 5-6% a year, this is not a bad place to be.
Yeah, the crashers all said 40 to 50%, which would be a crash.
Which would be very sexy, and that's why they're doing it.
Okay, here we go.
We are sexy on our own. We don't need those numbers.
I'm going to power through these, and then we're going to talk about them real quick. Okay, first one, Realtor.com. They predict home prices 2023 full year, would increase 5.4%. I disagree with that. I don't think it's going to happen.
I think you're right. I'm not expecting. So again, they're talking about national numbers.
Yep.
So will there be markets where this will happen? Absolutely. Okay. I don't know that that's going to happen nationally, and I'm not expecting that in Vegas, but let's go.
Okay. Home.llc. The firm predicts U.S. home prices to rise 4% in 2023. Now, This is from beginning of the year. That's their estimates. Mm-hmm. CoreLogic, they predict they will rise 2.8% from November to November. Now remember, from November to November last year, we're up November to November. Mm-hmm. We're up November. We're down since November a little bit, but they're predicting it to go up from 2022 to 2023. Mm-hmm. The next one is NAR. NAR expect existing home prices will rise 1.2% 2023, and mortgage rates will be 6.3%.
But that's a little pessimistic.
Okay, yeah. That's super pessimistic. Freddie Mac, home prices will fall 0.2% 23. Mortgage rates were 6.4%. They expect house price to decline modestly, but the downside risks are elevated. Mortgage Bankers Associated, 0.6% and then 1.2%. These are all very, very benign price reductions, okay?
Right.
They thought interest rates would be 4.4% in 2024.
And what that means is that most of us won't see any change.
And I agree with this 4.4%. I think we're going to get back to 4% interest rates, which is where we were from 2009 until 2018, basically.
Okay, so are you expecting 4% and change this year or next year?
By the end, I think sometime it'll start in the beginning of 2024.
Okay.
I think it's just going to keep declining throughout 2023.
So
I think it's good. I think halfway through the year we're going to be in the 5s, and by the end of the year we'll be in the really low 5s, maybe in the high 4s.
Okay.
Zillow, they would fall 1.1% year over year.
Some markets, yeah.
Okay. Fannie, 1.5% 2023, 1.4% 2024. Okay. They adjusted their 30-year fix down to 5.6. Because remember, they were saying 4.5 by the end of 2023. Redfin, they think they will fall 4%.
Okay.
That's not unreasonable. Amherst, they own a portfolio of single-family homes, 5% from September to September 2025. So they're taking this 3-year time frame, 5% decline.
Okay.
Okay. Wells Fargo, 5.5% 2023. Capital Economics, 8%.
8% up or down?
Peak to trough.
Okay, peak to trough.
So
Got
peak,
it.
remember, peak to trough is we've already seen some decline. So if it's already down 3 or 4%, they're basically saying we'll be down 8% total. So
Okay.
they're basically saying we're like maybe halfway through from the peak because we're down
Okay.
from the peak.
Right.
Goldman Sachs, 5 to 10. This is also top to bottom, peak to trough.
Okay.
So 5 to 10. Their model says 7.6% decline. Also, we're about halfway through that, if that's their case. TD Bank, 10% peak to trough. That's 5% in 2023 and 2% in 2024. They find firmer footing in 2024. Morgan Stanley, 10%. June 2022, which is the peak, to the bottom of where they expect 2024. So about 10%. However, if there's if they think if there's a deep recession, it could go 20% top to bottom.
Okay.
Now remember, that's the worst case.
Mm-hmm.
This is the worst we've seen yet, and this you have to have a deep recession, to get back that. Remember, what happens if home prices drop 20%? We're still up like a ton over 2020, right?
Right. Yeah.
Okay.
2019, 2020, those prices are considerably lower than where they are today or where they would be if we drop 20%.
Moodys expects a decline of 10%.
Mm-hmm.
A recession, they would say 15 to 20. Remember, the chance of recession is about 65%. All the economic firms, about 65%. Zelman and Associates, 4% 2023, 5% 2024. And then it adds up being 12% from the top, from the peak to top. So far, if you average these out, they're basically from the best to the worst. They're expecting home prices to drop about 5 to 10%. If you average them all. Ed Pinto, AEI Housing Center, 15 to 20% peak to trough. Home prices bottoming out 23 or 24. CoStar, 20%. People who think 10% drop in home prices are dreaming. 20% is more comfortable. He's probably trying to buy a house. He's hoping that the neighborhood he wants to buy a house, and they'll fall 20%. KPMG, they're a big accounting firm, 20%. Yield Street, 20% from the peak.
Okay.
So we're already partway through that too. Okay, that's all of them.
So, what I'm getting out of all of this is that 2023 is basically going to suck.
Potentially.
And 2024 is where we see improvement, but 2024 is going to also bring a lot of change, or a lot of potential change anyway. It's an election year. There's a lot going on.
Yep.
So I think that's kind of the big variable in there, because markets do react to election years.
Yeah, they do. So let's talk about this one, because we said we would ask this theoretical question. Let's say we had a crystal ball and you knew, let's pick the median estimate, not from the peak, but from today,
Okay.
where it's January of 23, that we looked into the crystal ball and the house you really had your heart set on to move into, to buy, was going to be 5% cheaper next year. And if you wait another year, it'll be 5% cheaper. And then after that would start appreciating. Now, if this was Tesla stock, you would probably wait. There'd be no advantage in buying Tesla stock knowing over 2 years you're going to lose 10%, right? Probably go buy something else. What about a house? What if you're an investor and you're thinking about buying investment property and you're going to get 6-7% return in rent, but maybe the price, it's going to go down 5%. Do you care even, or what? Let's talk about that.
Right. So I look at it two ways.
Okay.
And I wouldn't even give an investor 6 or 7%. I would just do a push on that. I would say, fine, it's going to go down 5%. I'm going to get 5% in rent. So it's fine. It's kind of it just kind of washes. But here's the thing. There are other benefits. So whether you're an investor or you're a homeowner, there are tax benefits involved.
Okay.
There's the opportunity as an investor to purchase maybe a better property without having to compete for it.
Okay. So you're,
okay.
Oh, I see what you're saying.
And then if you're
it's not a hot market.
Right, it's not a hot market.
Okay.
So, and then the flip side of that is if you're going to be a homeowner, then again, you need a roof over your head. So why would you pay somebody else's mortgage as opposed to your own? So even if all things being equal, it still makes more sense for you to be making those payments against your own mortgage rather than someone else's. You're getting tax benefits. You're getting a nice house. You get to, put the swing set in the backyard or paint, some room, some wonderful eclectic color or whatever it is that makes you happy. So there's quality of life if you're going to be a homeowner. So I think that there are reasons on both sides to still be in the market to purchase a home, whether you're an investor or a homeowner, for the right reasons and for the right property.
Here's the thing. An average year, 5 million homes are transacted.
Right.
In 2021, it was like almost 6 million. It was a lot of homes.
Mm-hmm.
Now we're at the 4 million homes a year rate.
Mm-hmm.
So when you go from 6 to 4, that's a substantial decline and people are freaking out. But it's not going to go from 4 to 2. It's not like next year like the number of homes sold is just going to crash. People have to sell houses. People have to buy houses. People get job transfers. People die. People have families that are growing. These people aren't completely stupid. They're not just, to some extent, they're riding the wave. They're like, hey, look, okay, home prices are probably going down a little bit, but we just moved here and we're not going to be renters for a year. Because once you rent and you lock in that 1-year rent, and then you see this house you want to buy, you're like, well, now let's wait a year and hope it's less money. And then,
Right. So
and like you said, mortgage interest deduction, maybe tax benefits. You don't have any of those if you're renting. So, this is not like the stock market where you're just, it's money in, money out. It's a durable asset that you're trying to, something you would actually like.
Right. Well, and that's the thing, if you're looking for a home for yourself personally and you've got your eye on a neighborhood or a floor plan, and you see that house, even if you don't know because you're new to the area, but maybe just do a bit of research, the homes in that neighborhood don't turn that often, that floor plan doesn't come up that often. So, you may as well bite the bullet and get involved now as opposed to waiting a year or 2 years and then buying it. Even all things being equal, even if you're not going to pay less in 2 years, or even if you might pay a little less in 2 years, it doesn't make sense to put your life on hold for something that may or may not happen. I'm a fan of living life today, not tomorrow, because tomorrow may never come.
Yeah. Full disclosure, our last investment property was purchased in 21.
Yes.
We did not purchase investment property in 2022.
Right.
2023, what's your over-under percentage on property acquisition?
Well, if I'm left to my own devices, then I would buy one.
Okay, so it's pretty high. There's an opportunity to purchase a property, you think, in 23.
Look, I'm always looking for an opportunity. So.
Always looking for an opportunity, right?
I like houses. I don't buy other luxury goods, but I buy houses.
Is that a Romanian thing, or is that just like you're just wired that way?
I'm just wired like that.
Okay. She's a Romanian, if you didn't know.
Look, I don't buy jewelry. I don't buy other expensive things.
That's like the only jewelry you have, right?
Right.
Okay.
But I like houses. I like assets.
I do too.
I like assets that appreciate, and I think houses are pretty.
I don't have a boat, and I don't have a plane. And I have a lot of friends that have boats and planes. Mm-hmm. I would rather have another house,
yes,
than a boat or a plane. Because the boat or the plane costs money, and the houses give money.
Yes, I completely agree with that.
And I can use the money that comes from the house to go rent a boat or rent a plane.
Yes, and we have done that very few times.
Yeah. Okay.
So if you thought the video was interesting, if it was humorous, if it entertained you, if it brought you some value, if you like charts, we love charts, please subscribe, hit the notification bell, like the video, share the video, leave us a comment, tell us what you thought. What are your thoughts? We've heard from 27 different sources as to what they think that the next year or two are going to bring. So bring it on. What do you think? We've kind of told you what we think, that 2023 is going to be kind of not so great. 2024 has potential. Yeah. So we'd like to know what you think. We welcome your opinion, even if it differs from ours, and we like engaging with you. We'll see you on the next video. Bye.
Bye.